Well, everyone, there's the standard disclaimer, guys. Just understand I am not a broker, so you're not going to get buy, sell, or hold recommendations from me. I think you all understand the risk of what's going on. But as we get started here, if you could just give me a brief idea of whether you're a new trader or a trader that's struggling or someone who's just looking for something a little different, just kind of, it'll give me a little help in the direction that we go. So we can just kind of type in new or there in the question box, or and I'll just let that, as you do that, I'll check it out. We kind of start at the same spot either way, and I'll go through a few slides here, and then we'll look at specifically some charts. First thing I want to remind everybody is that, and this is from Mark Douglas, who wrote Trading in the Zone, but he has some good ideas or in terms of the psychology. But the hard reality of trading is that if you want to create consistency, you have to start from the premise that no matter what the outcome, you are completely responsible. So you don't get to blame me, you don't get to blame the broker. Every trade you enter is your own responsibility, and every time you exit, you are also responsible for that. So if you remember that, it'll make life a lot easier, and just take responsibility for your trading. So what we want to do is figure out how to trade this market wave to wave. And the first thing to do that is we have to kind of accept the fact that these markets are calculated. And the real question is, do you know the calculations? And then the most important indicator on the chart is price. And then also just remember the very obvious, price will move in three directions, up, down, or sideways, and all of our trading is going to be based on that. Now we measure this by combining a core strategy of wave-to-wave trading, ABC pattern recognition. And I'll say right here, this is not Elliott wave. I actually know nothing about Elliott wave. I have been told that some aspects of this are similar to Elliott wave and some are not. So this is completely different. If you know Elliott wave, if you can drop some of that and just accept this from a raw level of just something completely new, I think that will help. And then we always use a higher time frame analysis to kind of get a full perspective and increase our odds of success intraday by looking at that higher time frame. So basic rules and what you need to know is that every pattern, by our rules, starts out as a correction, and these corrections can become impulses. And inside of all of these waves, there are minor waves, and so we're going to look inside of those larger waves to find those and give us odds on any given day. So we will use multiple time frames to look inside these patterns. And so what we'll kind of do is we'll try and trade from decision point to decision point. You can see on this chart we have some of these labeled based on those rules and how we calculate those waves. So that regardless of what time frame you're trading, and I'll say regardless of what symbol you're trading, knowing that higher time frame is going to be critical. And the higher time frame pattern is really what allows us to anticipate where that next major decision point is going to be. So rather than go through this, what I'm going to do is I'm going to go ahead and start out with a blank chart, and we will take a look at what we measure. And let me just delete that line, how we calculate these waves. So just assume we start at time zero. So from time zero, price starts to move up, and at some point it stops, and then it comes back. Now what we're going to do is we're going to label these. I mentioned we start everything as a correction. We label our corrections ABCs. So the first turning point is going to be A. Now how do we know where A is? We don't. So A, in this case, low to A, is a wave that generally we are not trading because we don't know where A is. The way we know where A is, and it's confirmed, is when B is in place. And we use Fibonacci's to determine where B is. And by our rules, to qualify for B, it has to come at least to this 50%, and then all the way down to 786 is our normal Fibonacci zone. Now B can occur anywhere above times 0 here, but generally it's going to be in this 50% to 786 zone. So once we have that, we go back to being able to label this B. Now, if price here only comes down a little bit and goes higher without reaching into that zone, and then comes up here, B's not in, we're going to take A and we're going to move it over here. All right, but in this case, for simplicity's sake, we're going to have B in place. And once B is in place, that actually does confirm A and allows us to calculate a target for C. Now guys, at any point in time you have questions, go ahead and type them in. I'll try and keep an eye on them here in the question box. So from B, what we're going to do is we're going to use on NinjaTrader, I use a hotkey F9. We're going to use our Fibonacci extensions here to calculate a target for C, and that's going to be something that you're probably very familiar with if you use Fibonacci's. As in this case, it's a 3-click process. We're going to go from B back to A, back to B. And our target for C is going to be in this range. Our first target is going to be 127.2%, and our upper target is going to be the 1618. So we're going to move a wave up to here, and this is going to be completely, so this would be a normal ABC pattern that we would anticipate. So once we have that initial ABC, our thought is that we are going to correct this entire ABC. And this ABC becomes our first, what we might call major wave, with 2 minor waves. A minor wave plus a minor wave equals 1 major wave. And we want to correct that entire ABC. So we're going to use our Fibonacci retracement tool over this entire ABC, and we're going to get a target down here. Now what happens is once we complete ABC, this also becomes a major A, and we look for the market to repeat itself. So now we have C, major A, and we're going to look for major B down into this zone. So price pulls down. We now have, I probably should have just done all these letters in advance. Now we have major B, and once we have major B, we're going to repeat this process. We're going to have a target for major C, again by using F9 on NinjaTrader or your extension tool, your Fibonacci extension tool, and we're going to have a target now for major C here in this zone. Now at some point this can continue to repeat. We get another move down. Now this is a major ABC, so we anticipate correcting the entire major ABC. Now since this is a major wave, recall from here, a minor wave plus a minor wave equals 1 major wave. So since this is major A to major B, it can be 2 minor waves to get to that level. And it's very common for there to be 2 minor waves in a major B to C to get to that level. And again, 2 minor waves. But we're still looking for that same zone. Now, at some point, and let's just move these out of here, we can get a move where we don't pull all the way into that zone, and we pull back a little bit, and we just continue up further. Now, that's what we use for our hint that maybe these corrections are over and we're getting what we call an impulse. Now impulses we label as 1, 2, 3. So those are really the only things that you need to know in terms of labeling is ABC and 1, 2, 3. So now that we didn't pull all the way into this major B again, we're going to take a look at this and say, well, maybe instead of this B to C, we're getting a wave 2. And the way we do that, our first clue is that we've moved past this 1618. So let's get a little more aggressive here and draw it out a little further. So once we've moved past that 1618, we're just thinking, well, maybe this isn't C, but this up here is actually 2. So the way we're going to get a target for 2 as we push through that upper C target is we're going to use that same Fibonacci extension tool, but we're going to do it differently. Instead of going from B back to A, we're going to start at time 0 here, and we're going to go all the way up to this major A. In anticipation, that is 1. And then we're going to project, rather than retrace, a target for 2. Now, by our rules, it's not 2 until we get to the 1618 projection. Now, once we get to that 1618 projection, that confirms 2. I drew that a little bit longer than I needed to. And we can change this now to 1. And once we have 2, that gives us a target for a wave 3. So once we have 2, we're going to anticipate the price continues. So the way we get a target for wave 3 is similar to the way we got a target for wave 2. We're going to start down here at the low, and we're going to come up to the high of 2 and come back, and we're going to project the 3 target up here. You can't see those real well. Anybody else having problems there? And you can drop me an email. We'll put my email address in here, and I'll send you a document also that has all of this again, that draws this out for you. And it's about to get bigger, and then we'll look at some real charts also, Santiago. So for our target for 3 is going to be the 127% projection of this wave 2. Okay, don't drop your emails in this. I won't get them. I'll put, let me go ahead and do this. Send me an email to that's not letting me put messages in. Info at nextlevelfuturestrading.com, and I think Renee will probably put that in there, and then I will get the email and send that out to you. And I'm also, at the end of this, I'm going to give you a link to come into our live room so that you can get a little bit more detail for the next couple of weeks. So we're going to have that target for a wave 3. Now, once we hit wave 2, we do anticipate a correction. And our first anticipation is that we correct the entire wave 2, not the entire wave, or not from the low to the high, but just from wave 2. Here, we're going to look for a correction. And then from that correction, we'll see a move up to our wave 3 target here. Now, after wave 2, our correction doesn't always come into that Fibonacci zone. It is after wave 2 where we see more complex corrections. Maybe we get some multiple ABCs, or we get a wedge or a triangle, and then it breaks that triangle and comes up to wave 3. So after wave 2 is where we see more chop. Now the same rules apply once we get to 3 as apply to our ABCs. Once we have 3 in place, then we're going to anticipate correcting the entire 1, 2, 3 over time, and the waves get bigger, and we expect that to happen with an ABC. Much like the first C becomes major A, the first 3 becomes major 1. And we start everything all over again, project a major target, 2 target, and then corrections off of that. So that's just the basics of what we look at. So what I want to do is I'm going to pull over another chart that I've labeled that's current, looking at a smaller time frame, looking here at a 60-minute chart, and how we've been trading this of late. Now this is the NQ. We trade primarily futures. In the live room, that is pretty much all we trade. We do talk about other symbols, but we trade futures, and NQ is one of them. So from the high that we've had on the NQ back here, October 10th, I think it was, maybe October 9th, we had a hard sell-off, and we came to the low. Now I've got a lot of labels in here, so just looking at, let me move all this stuff out of the way, because this is what we're using now. From this low, we pulled up into a zone. All right, so at this point, when we got to this 50%, that confirmed this is A, and this is B. Now we happen to pull down and come up a little bit higher, but initially this was B, and then this became B. Inside of this A to B wave, just above the 618, we had a pattern which would show more on the 15-minute, but we had 2 minor waves in that pattern. And it turns out that in that A to B, we have an A, pulled down to the 618 and went higher. Now remember, our target for C was the 127% of that A to B. So inside the A to B, there's another ABC pattern. You see we came right to the 127%. So we did have, inside that A to B, an ABC, making that an, well, let's get this out of the way here, making that a major A, looking for a major B. On a higher time frame, that happened inside this A to B. So we're able to track these all the way along. So once we hit this C target, and I just happen to have a confluence with a trend line that proved to be resistance, once we have this ABC, we know this is B, we're looking for that entire ABC to correct. And you can see here we came down to the 50% and we've bounced almost to the 618. So what that sets up for is we have a major A, major B, and we have a target here for major C, which is just going to be this 127%. So as I'm looking at this NQ, we came in today anticipating the potential for a bounce. Let's just move that up there so it coincides there. Up to this 48.72 area, which happens to coincide with this trend line resistance. So going into Monday and overnight, Sunday night, we still have plenty of room to bounce here on the NQ with an ABC pattern inside of that. In fact, we could probably take this extension here, comes right there. So we have a, so twice it comes to that level. So we use our Fibonacci's and our knowledge of patterns to anticipate where the market's going, and that's the real value of what we do pattern-wise and anticipating where the market is going. Now, we could get a closing rally that pushes us up to this level before we get out of here today. So we'll see how all that pans out. But that's how our basic ABCs run, guys. It's pretty simple. It's not anything we have to spend a lot of time on. And when we're day trading, I don't need to go, to a monthly chart and a weekly chart. I can go back to the recent high and see where we are, what pattern is currently in play. Now, I do want to use it against a backdrop of a higher time frame, and just to kind of give you an idea of how this works on any time frame, I'm going to go to the Dow here and look at a long-term chart here on this monthly chart. And the thing I want to show you here on this chart is that even on these monthly charts, if we come down here and we look at this first wave down here, comes right into our Fibonacci zone. So we would anticipate by our rules, this is A, B, and then we would look for C. Now, in this case, C we very obviously went way past a 1618 target. Right, so there is no doubt that this is not B to C, that this is an impulse, and that this now becomes 1, this is 2, and there was a target for 3, which would be the 127%. Now this 2 went way beyond the 1618, but that's okay. It's just, we would just call it an extended 2. So we had this target for 3 right here where the high was. Does everybody see that? Here's the 127%, comes right in where this white line is. So we got a 1, 2, 3. If it breaks above 786, we would call that strong in terms of a correction. We would call that strong and have lower odds of pulling back and higher odds of continuing higher. That's correct. So now we have this entire 1, 2, 3. And you recall from what I said earlier, when we get that 3, we anticipate correcting the entire 1, 2, 3. So if we use our Fibonacci retracements, you can see we came almost exactly here to our 618. And that was the 2009 crash and recession. So we've pulled back there. That also gives us a target now for, that's major 1, gives us a target for major 2. So we have reason at this point for this market to continue higher. So as we scroll forward here, our target for major 2 comes in all the way up here at 22,500. So the Dow still has plenty of room to run to 22,500 and still be inside of our patterns. And so we start breaking that down in terms of time frame. So if we go down to a weekly from that monthly, and we're going to look at what's happened since that 2009 low. And the first thing we see is we had this push up, we pull back, we pushed up, we pull back, and then we've really taken off up towards these highs. So we retrace this first move. And it didn't make it into, it came down right to this 382, but it didn't make it into our zone. So we're thinking A, B, C, or maybe this is on a weekly chart from the low. This is kind of all one wave. But something else happened. We came to the 382 there. When we overlapped that, we had what we call symmetry. So when we go back to this 2011 high, look at the pullback, it came right down to the 382. So now we have this minor wave and a second minor wave. Where is my arrows? There it is. Here. So these two minor waves here, a minor wave plus a minor wave, actually do make this all one wave. Everybody with me so far? Jack, I apologize, I did not see that question, so I'm not exactly sure what you were referring to. All right. So we have a couple things to look at. One, this is all one wave, but I do want to show you one other thing here on this. and that is what happens if we retrace this move down, back up, and get our extension levels. You can see we're right up here near the highs at 18,950. We got up to 18,700, so essentially we've kind of hit that 1618. Now the other thing we want to do is we want to extend and project now that we have that first wave. Where is wave 2? Well, we pushed well through the 1618. If we go back and see this low here and just pull it back to that low and use it as a stepping stone, you can see we came right to what we would call an alternative 2 right here at the 1618. So now we have 1, 2, a pullback. We have on the weekly chart, we can say we're looking for a wave 3. We'll squeeze this up, and remember wave 3 is the 127% projection of wave 2. So from wave 1 to wave 2, we pull back on a wave 3. We have room still for the Dow to get up here to 20,400 on a weekly chart. But we do have to recognize we're still in resistance, and until we break that. But if we break through this level, 18, the previous high here at 18,656, we have really strong odds of getting to 20,462. And maybe that's the sum of 2 minor waves is capricious. Well, it's whatever the 2 numbers are added together, actually, but it's wave 2 that gives us our target for wave 3, if that's what you mean. We would not go back and try and do 1 plus 2. But notice the thing we had. Oh, I see what you're saying here. What we had on these 2 minor waves is we had symmetry. So let me delete all these other fibs on here. The thing that gave us our clue is we had 2 minor waves, but we had symmetry in that they both pulled back. First, the minor wave pulled back 382 to the 382, right? And then when we overlapped them, it came right down to the 382. So the 2 of those together, because of that symmetry, gave us a clue that this was enough of a pullback to send us higher, and that we might not get from here. We might not get the standard down into here because the 382 was enough to hold here. We were ready for that, but once we took this out, this high out, then we could see the symmetry of the market. So so that would let us use that for projection levels. So that's kind of where we are in the market, guys. Now, looking at on the daily charts, this is still the weekly, but you can see where the daily charts are. We're sitting right on pretty important support here. If this support holds and we break out here through 18.7, I'm going to anticipate 20,000 by the end of the year. And the market does tend to repeat itself. If we do a retracement here of wave 2 to the high, it came right to the 382. So there's your symmetry one more time, 382. Does everybody see that, where we are on that? So for whatever reason, the Dow has been strong enough that 1, 2, 3 times now on the weekly chart, it's pulled back to the 382. So I have to know that 382 is important moving forward. And it may even come down, down into the daily charts and sometimes on the 60-minute charts. So that's all we do every day, and we just take it down to smaller time frames. Now, we do have entry charts that we use, and I'm not going to spend a lot of time on this. I'm going to give you an opportunity to come and visit us in the room. But we use the same kind of rules in terms of ABC corrections. And the way we use this, as you can see, if the background is green, we're thinking long. So this morning, we had, and we don't usually calculate fibs on these small charts just because they're so small. Let's stay in draw mode here. We got this ABC correction. We pulled this faster moving average above the slow moving average, got this ABC structure, and then you can see we got a nice move to the upside, and we would have been stopped out on this pullback by our rules. And then later this morning, it happened again. The fast band, this fast moving average is above the slow moving average. Actually missed this trade this afternoon. There's our ABC structure. Now we don't enter until the price actually reverses, but then you can see the nice move up, and we'd probably be out right here. More experienced traders might actually add into the position right there, but for beginners, we would be out of the second half of our trade. We would take half the trade off here, we would trail our stop out, and we would have been out right in here with the second half of our trade. Guys, it really is as simple as that. That's all we do every day, is look for those patterns. Now, in anticipation, it's nice that we have the anticipation that resistance is up here. We still got another 25 points of room, so it's a lot easier to take those longs. A lot of what we do in the room is anticipate, well, if we're in resistance, and this is resistance, and we get that signal, if we take that trade, we're going to do it with smaller positions and a quicker target in order to reduce our risk and increase our odds. These are a programmable Renko bar that I distribute with the system, so that, and we adjust them. It's a 5 tick, so each one of these bars is 5 ticks. The main thing is to know that it reverses when at 10 ticks. So this distance to this distance actually ends up being 15 ticks. And that just cleans it up so that we can see those patterns a lot easier. It's a lot easier to see than on a 15-minute or a 5-minute or a 5-range chart. Renee, thanks for putting that in there. What I want to do is really that's all it is. If you have questions on patterns, how we do patterns, I'm happy to answer them. I'm going to clean out these drawing tools here. Let's remove the text and the arrow lines, fib levels. I want to leave the horizontal lines are on there. Put that back. I don't have this ES chart labeled right now, but I could do that real quick. I can see it here. There's an A. After a while, you just get where you see them. There's a B, and there's C here. I also know that on the ES, on the higher time frames, we've been pushing through the 786 Fibonacci levels a lot, and what we've actually, our symmetry for resistance on the ES has been the 89% mark. So let's see if we put up the 89 here, add that, we came right to 89%. So for whatever reason, the ES has been showing strength, but the 89% level has been holding and then pushing us back down. So that's another reason for the room. Now, using the X90 Wave Rider, I can give you an idea of what we, performance metrics. Now this is about a month old, guys, and it's been very, very slow the last month. So I think we've only added about $3,000. In fact, that maybe over the last 6 weeks, we've added about $3,000 to that because we're not getting very many signals. Yesterday we got 0 entry signals because the market's been so slow. But this has been our profit over the last 2 years, assuming you take every trade, every signal with 2 contracts under our rules for targets and trailing stops. Now, we've also broken it down by instrument, by day of week, and by time of day. So I can't remember what day this is on the ES, but you can see times of day that we've had success. We have also on the NQ I can tell you on the NQ that this is a result in a morning. NQ trades much better. In fact, everything, with the exception of crude, we have much better results in the morning than we do in the afternoon session. The Russell, and then crude. And I can tell you on crude, this is on Wednesdays. Wednesday is the best day for us to trade crude, due primarily to the inventory report. And it just trades a lot better. And you can see here on crude, the day of the inventory report, the afternoons are pretty strong. And that's really it, guys. Here's some contact information for you. On Twitter, I do tweet out our support and resistance levels every day, except Friday. And then I also want to pull up a registration thing. So I'm not going to ask you to buy anything today. I think the best thing to do is to come into the room for a couple of weeks. So let me give you a link, registration link here. And if you just want to go to this link, Anna, if you can see that, or I mean Renee, sorry, apologize. Working with Anna earlier this morning. If there's a way for you to copy that link and get it in the chat room, I may be able to do that here. See if I can figure out how to do that right here. There we go. If you could register there, an email will come out. We're in the room Monday through Thursday from 6 a.m. Pacific, 9 a.m. Eastern, so a half hour before the market opens. We set our support and resistance levels, and then we close her down at the New York lunch, so we're in for 3 hours in the morning. Historically, 2/3 of our profits, just over 2/3, have come in the morning session, so that's really the session we work. Next week, it will be just Monday through Wednesday, and the week following we'll go Monday through Thursday. So you can register there, drop me an email. I'll send you any documents. If you are a NinjaTrader user and would like the indicators for trial, you can send me an email at that same address with your NinjaTrader machine ID, and I will send you a zip file with all of the indicators, with the training documents and everything you need to get set up over the weekend, and then you can have everything set up in the live room on Monday morning. So I got about 10 minutes here, guys, before we need to wrap it up, so if there's any questions, I'm happy to answer them. If not, I'll turn it back over to Renee and say thanks for the opportunity to visit with you, and we'll hope to see you next week in the room.
All right, thank you, Don. We really appreciate you taking the time out of your day, and we hope to have you back at Investor Inspiration in the future.
You bet. Hey, Brandon, those other charts are, I'm not a market profile user. I'm trying to learn it. So I just put them up there to just kind of watch it and see if I can't figure out how to use it. Just to have something else in my arsenal for when things are really slow like they have been. So I've had time to kind of learn something else. That's all those are.